Hi everyone, how's it going? This is Gersha from Technical Option Traders Inc. Hope you guys are having a great day. Let's get started with a discussion on the markets today. So overall day in the S&P 500, if we just look at it, it looks very bearish overall, with the stock market being in a downwards trend, right? So right now, very recently, it just set a higher low right about here, and the downtrend here is holding strong. So if we want to see a reversal, what we have to see is we have to see a lot of price action, which is buying pressure, push to the upside and close above at least the 420 level. Until we get above the 420 level, any action that happens here could be choppiness, and it could set like a lower high, testing the 400 and push its way back down. Consistently, the trend right now is lower lows starting to happen, right? So we are wiping out lows that were set quite some time ago. Most recently level that is tested has been tested back in December of 2020. So this was the previous low at that time, and the price point has gone back to test levels. So 362 was tested back in November of 2020. So slowly but surely we're starting to make our way down. Now the $1 million question right now is on everyone's mind is, are we going to start to make our way up? We won't know that just yet. Based on price action alone, we're starting to see consolidation with low liquidity, which is fine, which is healthy. But what we're starting to see at the same time is we're starting to see these random gaps. Okay, gap up, gap downs. Okay, this is due to low liquidity and aggressive price movement, and a lot of traps that are being set by market makers in this particular zone right here. Okay, we want to make sure that we're avoiding this zone right now. A lot of the trading that is happening is very volatile, is very erratic, and we don't want to be a part of that as retail traders. We want to wait for our setups. And we have to understand the setups may not be there right now, but there are setups that are going to come in the next couple of weeks leading up into the month of July. Right, so we have to keep an eye on that. For now, the levels that I'm watching is I want to see a break above 390 and a push to 400 on the upside level. On the downside level, I'm looking for a break below 360, push down to possibly 350 for a quick down move to the lower levels here. But for now, on the S&P 500, we're seeing a consolidation. We'll see if we can get some sort of aggressive price movement in the next coming days or even the next couple of weeks. Looking at the triple Qs, like we talked about yesterday, triple Qs just in this little area is stuck. A lot of top wicks happening, higher low as well, and making its way down, setting new lows. Triple Q is testing levels that were tested way back in also 2020, but in July. Okay, so triple Q is making a more aggressive move down. So technically, we're literally 1 month away for the triple Q, and this will have taken back literally 2 years of gains, just taken back right off the handle, right? So we want to see if this is bottoming. Very possibly, we could see a bottom on it. But today, according to Jay Powell's testimony, he's saying that the American economy is strong and it can handle a tighter policy and aggressive interest rate hikes. So we'll see if that does happen. If that does happen, interest rate hikes continue to happen, it could really hurt tech. Okay, because these are growth companies. They rely on low interest rate environments to grow. So it could really continue to hurt tech. But if we're looking at levels alone, on technical standpoint, I'm looking at a close above 298 to push to 303, then 305. But bigger level that I'm watching is up here at 315. If this level continues to hold, we'll make our way down further. Upside level is if we break this 298, that's a downtrend line that's going to break and possibly push quick to 305. Okay, on the downside, if we do break the 269 level here, we have a level right about here, which is 260, and then below that is about 250, and then we're getting very close to the 2019 highs. We're on a 230 range, right? So it is starting to look very, very interesting for the triple Qs, but I do expect a bounce. If you look at the Qs, you're looking at this line chart, aggressive move down with consolidation. The next couple of days, and by I would say early July, we should see a breakdown or a breakthrough. Dow Jones, similar concept here with S&P and the triple Qs. Okay, Dow Jones came back and has tested the highs of 2019. Okay, so that's something that we want to keep an eye on. Dow Jones doesn't sort of reflect the economy of the U.S. and how it's behaving right now. So overall, right now, this downtrend is very aggressive. We're getting consolidation. We want to wait for the next couple of days to see which way the price action decides to go. If we get a break above 310, we can easily push to 314 and then 318. But right now, what we want to keep our eye on is a bottom level of 295. If this breaks, a quick move can fill this gap at 285. Okay, that's very, very possible right now. The trend in the market is bearish. There's no doubt about that. We broke down, we retested this level, and we pushed down here. Okay, but this recovery that we're starting to see in Dow, it's with a very low volume, so not a lot happening here. So these random spikes of volume as well. So we'll see. It could be shorts covering. Okay, but right now there's no confidence in this trade. There's no trade at all for me for the Dow Jones right now. Looking at IWM back in consolidation. You don't want to see the stock completely slip or this index completely slip. Could be very worrisome if it does. Okay. So right now to the downside, what we're starting to watch is price action, making a lower high. Okay, so this is a level right here, 190, and we pushed all the way down to 165. Okay, and even 163. Right now we're starting a consolidation zone. We're trying to pop here to 180. Right, if we do pop to 180, that's great. We want to see some sort of resistance here, and then we will work our way down. Okay, so just understand that these levels right here are very important. These gaps, we can have these gap fills come through. If these gaps hold, we're gonna make our way down aggressively, and it could be due to various reasons that why this happens. But for now, we just have to keep an eye on this and to start to observe and see what happens. If we push below 163, we're easily gonna go to 155 and then 142. Okay, on the IWM, if we look at the 1 hour chart, the resistance remains at the top level right here, 170, and then 175. Okay, so for now, IWM, Dow Jones, Triple Q, and SPY, all looking very, very bearish. Gold, gold, if we look at it, is consolidating here in this range right now, and we want to see what the next move is. I feel like it's gearing up to make a move. So right now, if gold does break below this level, which is 167 level, it'll break down to the downside at 163. If it breaks 163, easily goes down to 157. But for now, there's a big consolidation. This is a level that gold needs to get above. It's a level that I've been watching for quite some time. So if it can get above this level, which is a 175, we can take a bullish trade to 180, then 183. That's something we have to keep in mind on and we have to observe. ARK, on the other hand, sorry, before we go to ARK, we're going to talk about VIX. VIX holding this level, consolidating. VIX needs to get below 20. There's no question about it. If we can't get below 20 and we stay in this range, we're in a highly volatile environment where we can get erratic moves, right? So also we're in the summer months of trading, which is very hard to trade in these months. So overall, the price action of the market is sustaining volatility, and that's why the VIX is still holding up these levels, right? So what we want to look at when we look at ARK, ARK is tried to push up here, unable to do so, broke down, and then it just just rejecting this level here over and over again. We can have a period of consolidation, but 46 needs to break before we push above. But we have to keep an eye here. ARK is at almost almost at 2017 levels, right? So 2017, 2018 levels. So that's what we have to keep an eye on to see how ARK holds up here. But overall, very, very interesting look for ARK. KWEB broke out and consolidating at the top. I do like this consolidation pattern here for KWEB. The way it's holding up here, I feel like if it breaks 33, can easily push to 39. That will be really big for Baba, Baidu, JD.com. If we do get a rejection here and we start to break, okay, confirmation would be a break of this level, and then break of which is 29, and then the break of 28 was where I would take a short position to possibly the 26 level. That means this support level is lost once again, and we could possibly go down and test 23. Right, so that's what we want to keep an eye on KWEB, because if this level breaks to 27, easily we have a move down to 26, then 23. Right, so KWEB so far holding up very nicely here, but what I want to see is I want to see a breakout above the 33 to 35 level, but right now it is holding an uptrend. Okay, so this is the line right here. Okay, it's holding this uptrend line. So that is very solid for KWEB. Even if it does come down to test it, hold it, and bounce would be very good. Or it could keep consolidating here, and it could confirm my thesis that this is accumulating up here. Okay, so overall market, very sideways with the Fed numbers, with the Fed meeting today, and testimony by Powell and some of the Fed discussions today. So they did mention that there could be a possible recession on the horizon, interest rates and tightening overall on the horizon as well. faster tightening or aggressive tightening possible. So we have to be very careful. This is like very hard. This is a very hard environment to trade. Just be very careful with your money. Have your stop losses and your trades planned out before you execute them. This was my analysis for today. I'll see you guys tomorrow.